Reversal trades. Are they worth your time? And how do you do it? Hello everyone, it's James here from JEAFX. In today's video, I'm going to be giving you my basic guide on reversal trading, telling you whether or not you should even bother trading reversals, and if so, how should you go about doing it safely and successfully. Now quickly before we dive into the video, head over to the link in the description when you're done and join my free course. That's going to provide you a lot of value at absolutely no cost and only a small amount of your time. So diving back into the video, first of all, what are reversal trades? There are essentially two ways to trade in the market. We have continuation trades and reversal trades. Continuation trades are those movements with the market, and reversal trades are the moves looking for the tops or the bottoms in the market. Now, just out of essence of what they are, continuation trades are essentially going to be safer because you are moving with the flow of the market. When it comes to reversal trades, you are obviously catching the tops or the bottoms in the market, so there's a bit more risk and you really need to know what you're doing, otherwise you're going to get continually burned. A lot of traders will talk about catching a falling knife. This directly refers to reversal trading because if the market is falling down hard and you start to try buying into it, you're essentially going to be catching that falling knife and you're going to get cut because the market's going to continue falling through. So there's a few things we need to know about reversal trading in order to do it successfully. And we're going to head over to the chart in a moment and look through that. Before we do it though, I have a couple of talking points. We're going to talk about high time frame and low time frame reversals first of all, and then I'm going to tell you some of the dangers of reversal trading. So high time frame reversals are going to be these weekly, daily, full-blown trend shifts. Catching the tops and bottoms of these, if you are a swing trader, is absolutely brilliant, because then you get to follow a weekly or daily trend for huge position trades. Now, not all of us are swing traders. Some of us do trade intraday or intra-week movements, in which case the low time frame reversal trading is what we're going to be focused on. I'm going to look at examples from both in this video, but the low time frame traders are going to really be looking for intraday reversals, where the price action of the day reverses and moves either to the upside or the downside, opposite to what was happening in the morning. Now, these reversals can come around due to sessions. We often see reversals come in through the New York session. So oftentimes we will see London session moving one way, New York session is going to flip the market the other way. And these are the kind of reversals you'll be looking for as a low time frame trader, as opposed to what the high time frame traders may be looking for on those weekly and daily charts. So as mentioned, I will give you an example of both when we go over to the charts. But before we do that, let's have a talk about the dangers of reversal trading. Now, the first danger of reversal trading is getting caught on the wrong side of the market and getting burned because of that. If you are looking to buy in a market that is clearly downtrending, you need to see some form of shift to buying price action before you start trying to get into position. This is very important and it's obviously going to save you from a lot of losses. So we need to make sure that we are being vigilant about our entries when we are reversal trading. Another danger that is going to come in as a result of reversal trading is potentially you might get married to one bias and you can end up actually losing loads of trades trying to buy into a selling market, as opposed to actually just selling into that market and profiting from the current downside moves that are taking place. So when trading reversals, these are always important things to think about. Is the market really ready to reverse yet? Or am I just buying and selling into this market, hoping that it's going to turn around? And is there a better opportunity the other way? If I've taken a loss trying to buy into a selling market, is there a possibility for me to just sell into this and profit from the current move that's happening, as opposed to marrying this buying bias and missing out on this whole downside move, hoping to catch that bottom? As long as you think about these two things, you should do well reversal trading, providing you know how to do that. And to know how to do that, we need to head over to the charts. When trading reversals, there's one thing we always need to see, and that is a confirmation of some form. The reason I say this is because otherwise we are blindly selling or buying into a market that is going totally the opposite direction of what we're looking for. Now, if we use for an example Euro GBP here on the daily time frame, we can see that we have supply zones here, we have supply zone here, and there's going to be lower time frame refined supply zones in the middle of that. Now, if we're expecting this bullish market from this point here, we have these higher highs and higher lows. If we're expecting this to reverse, we can't just sell straight into that using sell limits. Okay, sell and buy limits are good for continuation moves. For example, if we wanted to put a buy limit at this demand to continue what we know is an already bullish trend. But what we can't do is actually sell or buy into reversals using this same concept. Now, obviously you're welcome to go and do that, but it's going to cause you a lot of pain because most of the time this is not going to hold up, right? For us to sell or buy into a reversal safely, we have to see a confirmation of some form, which is going to indicate that shift in the trend. So let's have a look then. If we were to blindly sell limit here and here, we can see by skipping price forward, we are going to be destroyed. Okay, you can see we had this push up here, initial little rollover, but no confirmation. Market fired through, no rollover there and no confirmation, and just led into another losing trade. So if we are to sell or buy limit into reversal trades, we're going to take a lot of pain. We're going to feel a lot of pain because of those actions, and it's just not worth doing. What we should be doing instead for reversals is looking for confirmation. And the confirmation is generally always going to look just like this. So breaking down what this is, we have here a higher high in the market, we have a higher low, then we have another higher high. Now after this clear uptrending structure, right, we can see that we have a shift down which breaks into a new lower low. So this lower low that comes in at this level is what's going to show us that the trend has actually changed from bullish to bearish in this example, or if we're looking at it from the other way around, from bearish with these lower lows and lower highs into bullish with a new higher high. So this pattern is always what we want to see in order to safely trade a reversal, and generally our selling moves are either going to come in at this point here or as a continuation on the way down here. So this, by this point, is actually going to be a continuation trade because the trend is now underway. It's a bearish trend, as we can see from these lower lows and lower highs. However, if we are trading the pure reversal, that is going to come in at this point here, being the point of which the trend has actually shifted from bullish into bearish and from higher highs into lower lows. And the lower lows and lower highs are exactly what we are going to sell in order to get into this new trend reversal. So price isn't always going to be as clean as that, but we're not going to go entirely deep in this video as it is just a YouTube video. But there is going to be a lot of value here for you, and hopefully by just understanding what I've just showed you, you can help to avoid a lot of losses on these reversal type trades that you are taking yourself. Now, if we are to look at the current structure then, we can see here that yes, sure, we didn't react to the supply zones here, but we failed to make a new high, and the market has had this absolutely dramatic downturn that we can see here. Now, if we are then to consider the trends we are seeing, we can see then generally we have, higher highs and higher lows, trading all the way through this price action until we get to this point, and now we finally broken down. This has broken us through a higher low, now making a lower low in the market, which then actually indicates that shift in the trend. So from this point, this is where we can actually begin looking for selling opportunities because we know the trend has clearly shifted in our favor now. This right here is the breaker structure that really indicates it for us. This is the first point of which the market has stopped forming higher highs and higher lows and actually now shifted into the lower low and lower high formation that we've been talking about. So now looking at the market, you'll see that instead of making new higher highs and higher lows, we actually come down, make a lower high and a lower low, and now a lower high, and now we are pushing down potentially towards a new lower low. Now at this point, we could still have reversals, of course, to trade us through substructure ranges, maybe to trade towards this level or this level here. But overall, we can see that the market has now formally shifted from higher highs and higher lows into lower lows and lower highs. And alternatively, if we do not break through that low yet, that doesn't change the trend for us until, of course, we start to pass some of these previous higher highs. Now looking at the markets from a low time frame point of view, here's an example of a low time frame reversal or an intraday reversal that day traders would use. So as mentioned, sessions can be very useful, and for this I use an indicator called the FXN Asian Session Range. This is going to show me the sessions, the Asia session, the London session, and the New York session, which I use in one of my systems, ALS, and I also use to gauge the times at which high volume moves are likely to happen. Now, one characteristic that I'll give you a little gem is that around New York we often reverse, especially on these major pairs, GBP USD, Euro USD, and so on. Now the reversal is not guaranteed and it doesn't always happen, but a lot of the times we will see reversals coming in on New York session or on London session. Now we've had a high volume, fundamental heavy week, so we haven't seen it too much this week, but here we see London down, New York back up, London down, New York back up, and so on and so on. Now, if we look at this day's price action, this is how we would identify a clear low time frame reversal, and that is going to be around New York open. We are expecting that the market has a high likelihood of turning around. So London session, we see downside price action. And if we mark out the structure here, we can see we have this lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then into New York, knowing that we are likely to see a reversal, when we see this break of structure here, this low time frame structure break, we can use our same concept to look for that pullback, higher low, and then buy. And as you can see on the intraday basis, we got just about this higher low here, and followed through from that was a buying move, which took us up towards previous supply and structure points. So as you can see, by understanding the session timing and also understanding how to trade these reversals, you can build yourself a system entirely around structure, time, and price. And using that intraday timing helps us to get these smaller reversal moves and helps us to profit from these smaller reversal buys on an intraday basis. The one thing to always remember when reversal trading is that before we start to take any action, we have to see that nice reversal signal coming in order to be safe about our trade. If we buy or sell into that, sometimes there's a place for that. It's going to be risky. but 99% of the time you should always be looking for some form of pattern showing you a shift in reversals before executing on a trade. If you found this video beneficial, head over to my channel. There's plenty more videos there and I'm sure you're going to benefit from them. Now please drop me a like if you've enjoyed this video. That's going to help me grow my channel, and make sure you subscribe if you want to stay up to date with future videos. Hopefully this has brought you some value. Thank you, and I'll see you in the next video.